Stock picking is a big part of Barron's DNA, but did you ever wonder how we develop our stock picks? Sometimes our picks stem from noticing an economic trend, such as the Federal Reserve's move to raise or lower interest rates and looking for stocks that will benefit. Other times, we may screen for stocks in a particular sector, such as retail, and look for companies that look undervalued compared to their peers, but show strong earnings growth potential.
May I suggest you buy at least 2 pairs? Then you'll always have a fresh pair when you need it.
Not a bad idea.
Or you can be like my colleague Al Root and scan the whole S&P 500 in search of the best opportunities. Al covers all parts of the market, but focuses mostly on autos and industrials. You might have read his stories about Tesla and Boeing. Recently, Al screened the S&P 500 for stocks trading well below the average price target of brokerage analysts. The stocks had buy ratings from at least 60% of those analysts. He found 22 stocks that met those criteria. 3 of them were tied to aviation: Airlines Alaska Air and Southwest Airlines, and plane manufacturer Boeing. So what does Al think of the airline industry?
You know, especially on Wall Street, everyone loves to rinse and repeat and try to do anything that has worked in the past. 2021, airline stocks had a really nice first quarter as fears of pandemic started to wane and people started to think about travel and opening up again. The stocks were weak into year end, partly because of Omicron, and it just feels like early 2022 is exactly like early 2021. These are not expensive stocks. They have been beaten up. I still think that they work again, just like they did at the end of 20, going into early parts of last year, as pandemic fears fade and Omicron infections go down. So you're left with a sector where we'll be talking about improving trends, beaten up stocks, cheap on any sort of metric relative to, what's a normal year going to be like them in the future. So I think airlines is a good bet.
There's no question that the airline industry has been severely impacted during the pandemic. In the early phases of COVID-19, investors wondered whether and how airline companies would survive. And even as vaccines have been rolled out and people start returning to their pre-pandemic lives, the trajectory of airline stocks has been, turbulent. New COVID-19 strains and a slow return of business travel have made it difficult for flying and stock prices to return to pre-pandemic levels. After the industry's setbacks in 2021, analysts are hopeful that 2022 will be more of a transition year, with pent-up travel demand leading more people to book flights and take to the skies.
A new concept in air transportation. The travail has been taken out of travel.
The Thanksgiving holiday, for instance, saw air travel approach pre-pandemic levels. The December holiday season was trickier to track. There appeared to be a desire to travel, but the Omicron variant and staffing shortages led to thousands of flights being canceled, meaning that those who wanted to travel couldn't. As for how to play the industry, here's what Al says.
When you look at the ones that airline analysts like the best, that leaves you with Southwest Airlines and Alaska Airlines. Southwest is the relatively more expensive company. It always is because it's relatively high quality, long history of growth and consistent earnings. Wall Street analysts see about 30% upside for Southwest shares, about 40% upside for Alaska Airlines shares. So those are my 2 favorites. Now, those are, predominantly U.S. domestic type airlines. If international air travel does really, really well, maybe American does better, or whether maybe United Airlines will do better, but I will sleep better holding an Alaska or a Southwest.
It may be time for airline stocks to lift off.